Income Tax 2020, Practice Problem 1, Presentation 12, Adjustments to Income, IRA, or Individual Retirement Account Deduction. Come in, relax with Income Tax 2020. Here we are in our Lacerte Tax software. You don't need the Lacerte Tax software to follow along. However, I do think they have a 30-day free trial, so if you can get access to a promotional or demo version of it or any other tax software, it might be a good tool to practice with. So we're continuing on with our comprehensive practice problem number 1. In prior presentations or in the prior section, we entered the information for the income items mainly, and that adds up to the $81,030. And now we're entering the information that are going to be the above the line deductions as opposed to the below the line deductions. And the below the line deductions being the standard or itemized deductions, and the above the line deductions being the adjustments to income, most of them on then Schedule 1. So now we're going to think about the deduction related to the IRA type of deduction. So when you're doing the data input into the tax return, this is the type of a deduction that's above the line. So you kind of like to do it up here before you go too far into the tax return, because that adjusted gross income can then have an impact on phase outs and whatnot. And the IRA deduction could have an effect on the adjusted gross income. However, it's also one of those items that you may not have until the end. It's one of those last kind of things where then you can oftentimes recommend some actual tax planning or actions that can be taken at this point in time, at the point in time of the tax preparation, for the client to possibly lower the taxes. So they typically have up until the filing of the taxes or the due date, which is April 15th, without extensions, that they might be able to continue to put information or money into an IRA. So basically what happens then is if they give you the information that says, hey, I put this money into an IRA, then obviously you can enter it in and there's no problem. They would have to give you the information. You're not going to get a 1099 typically or a 1098 or any kind of documentation from the bank or anything like that. It's something that you want to be having on your question list basically all the time. One, do they qualify for an IRA? Did they put into an IRA or some other type of retirement plan? Now note that the IRA is going to be, kind of, you can group them all together with the other retirement plans, and they kind of are linked together. So how much can you put into an IRA will be dependent in part on whether they have access to some other retirement plan, most commonly through the work, such as a 401k plan or something like that. If they're married, that can still have an impact if one spouse or the other spouse has money that's going to be in a 401k plan or an IRA. So our goal all the time is at the end of the tax return, we're going to give some kind of planning information possibly related to the IRA, usually saying, hey, you could put more money into the IRA or the 401k plan or both possibly next year. You might want to do that. And this year, it's too late to put money into the 401k plan now. But if you have the ability to put money into the IRA, then you might want to do that. And you could possibly do that before we, before the tax filing deadline here on April 15th. So that's going to be the standard questionnaire, meaning you're almost always going to have like an open item list related to retirement plans, at least saying, you may be able to put more money into the 401k plan, or do you want to put money into, say, a retirement plan if you have the ability to do so. Now, this software has like an analysis tool that will help you tell you how much can be put in possibly this year and next year based on a projection, and how much taxes would be saved if done so, which is a great tool to have. I think many tax softwares kind of have that option now, so that's a good option to have. So in our situation, we have two individuals, they're married. One of them had access to a retirement plan and the other did not. So that's going to have an impact on our how much you can put into an IRA. So if I go into my income and W-2s, then I'm going to say, okay, so one had access to an IRA and the other did not, and each spouse had wages that was for them, right? But the second one, the spouse didn't have access to the retirement plan. So that's going to have an impact. You got to make sure that is done correctly if you want to then get the correct advice in terms of how much possibly could be put into an IRA. So then we're going to go up top and say that we want the adjustments. I'll do it from the forms here. I'll go to Schedule 1. And now we've got the IRA that we're looking for. So the IRA line 19. So I'm gonna jump to it using our software, right click and jump to the data input. Now this has a nice feature too that you could say, I want to maximize the amount they could put in. So if I put a 1 here, the software is going to tell me how much can be put into the IRA. So I'm going to try to max out how much can be put into the IRA. I'm going to go back on over. And so now, so it looks like they're both able to kind of max out the IRA. If I then hit the worksheet, you could see basically any kind of limitations that could be put in place with the worksheet here. I'm going to be reliant on the software to some degree to help me out with the phase outs related to the IRAs. So again, if they just basically told us, if they said, hey, we each put 6,000 into an IRA because we know we can based on our tax planning last year and whatnot, then we would just enter that amount into the system. If we're basically saying, hey, we're going to recommend that you put money into an IRA and we're going to max out the IRA contribution and then you're going to put that much into the IRA, we may still be able to do that. Once again, it's one of those last kind of tax planning things that you can do. So we might log that in there, or we might have nothing in basically the IRA here if they hadn't put anything in it, but then recommend to them that they could put money into an IRA. It would look something like this. We'd say, as of now, max contribution for, we're going to say Sam, and then whatever that would be, max contribution for Jane, and then tax savings. That'll typically be the note that we would include if they had not yet put it into the IRA and we want to put it into the IRA or suggest that they do so. Now, if we make a suggestion that they contribute to the IRA, we want to make sure that the tax return is completed because we don't want to mess up and tell them to put more money into an IRA than can be allowed. So at this point in time, I'm getting to the IRA deduction here. I'm just going to note it. I'm actually going to put it into the tax return here so we can see it. But in practice, if they hadn't put any money into the IRA, I would put it on the notes here for myself as I'm checking it. And then once the tax return is completed, I would test out, and the diagnostics and analysis will typically tell me in this software whether or not how much they could put into an IRA and how much they would save by doing so. If it didn't, then you could just test it out with the software. You can take away the 12,000 and see what the tax would be, and then add it and see what the tax would be. The difference would be, the tax savings. So you can kind of figure out what the tax savings would be, and then when your correspondence with them, when you're as close to done with the tax return as possible, would be then this is how much you could put into an IRA. If you do this, you can have basically these savings on it, and then you can request, and that'll be like one of your last kind of requests or suggestions and actual planning that could be done basically during the tax preparation part of the return. So that's now means that our adjustments to income, if we keep that 12,000, is at the 13,850. If I then go back up to the first page of the 1040, there's the 13,850. For some reason, that 300 was not put on Schedule 1, but here on the first page of the 1040, that's how they designed the return. That's for that charitable contribution. So we have the above the line deductions of that 14,150. So at this point in time, we got the total income, 8130. That's from the first section. Now we've got the above the line deductions of the 14,150, bringing the adjusted gross income down to 66,880. Notice that's a huge deduction too, because it also reduces the adjusted gross income, which is often used, the main thing that will be used when applying phase outs for things like deductions and credits. And the lower amount will typically allow more benefit with certain types of deductions and credits. So it's really good to take advantage of if they can put money into a 401k plan or put money into an IRA. And in the note over here too, with the person that put money, I believe was Sam, into the 401k plan, typically the software will tell us based on the information for this year how much you could put in to maximize the 401k plan, and you can recommend putting money there as well. Obviously, this is one of those areas where you need cash flow to do it. So if they don't have, obviously we don't have the cash to put into the retirement plan, then we can't take advantage of that. But if we have the cash flow and we can do it, it's typically a huge benefit, one of the big benefits to do. So for, standard people or most people. So then we got the 66,880. We're taking the standard deduction of the 24,800 for married filing joint. That brings the taxable income down to the 42,080. Tax then applied on page 2, which is going to be that 4,498. And then we had in the withholdings for the W-2s, the 8,000, bringing the refund up to now 3,502.